Good morning, everybody. It is December 28th, 2023, 8:45 a.m. We are in the final two trading days of 2023. We've got today and we've got tomorrow. Tomorrow's a Friday, and then Saturday's the 30th, Sunday's the 31st, and we start the new year on a Monday, January 1st. So we are here wrapping up the final 2 days of 2023. And this is going to be really interesting because obviously markets had a pretty phenomenal year just historically. Since 2021 and 2022 and sort of what we've seen. And so we've got to kind of end it out strong now for the next 2 days. What we're seeing in the pre-market, we have some macro data to get into. Jobless claims. Cathie Wood sells a bunch of stock to load the boat on something else. We're going to talk about Microsoft, some of the issues they're going through. Macro data is pretty in line, enough for markets to be green. S&P 500 right now, 477 in the pre-markets. It gets three more points, and then you're at 4,800. One more point, and you've beaten the all-time high on the S&P. So if we end 2023 at all-time highs, it would be pretty incredible to see that happen. Nvidia is green in the pre-market. AMD is green. There is a bunch of stocks that are red, and we're going to talk about why those stocks are red that were running last night after hours. It was really incredible why they were running after hours, but they're red in the pre-market, so we'll talk about that. They are the Bitcoin miners. But overall, markets are doing well just in the last 2 days before we have the year close out. So we got a lot to talk about, a lot to get into. Thank you all for being here with me today. Let's get into the market open. Mario, Richard, Top Dasher, Mark, Casey, Win, Charles, Invisible Voices, Gerald, Missy, Ashka, Ryan, Brian, Matt R, Sam Chan. Gerald says, how late will our leader be this morning? I was on time. I was pretty good. Even though last night I did finance junkies, me and Steve, we stayed up till like 12:30, almost 1 a.m. doing a 3.5-hour podcast. We had no business doing a 3.5-hour podcast. By the end of it, we started talking about what are our favorite chocolate bars. I mean, that's how long that podcast got. So didn't get too much sleep, but I'm here and I'm ready to go. My fever has come down dramatically. Now my nose is just stuffy. So outside of my stuffy nose, the fever has come down pretty well, which is really good. So yes, I am feeling better. Charles, thank you for asking. Jake, Heavy D, Juan Carlos, Brown Grouping, Jiff Magic, Tamiro, P. Morton. All right, let's keep it going and begin the market open. Now, I do have a towel with me, so excuse me if you see me wipe my nose on the towel. I kind of have to do it because, again, the nose is just too runny. The problem last night was my nose was too stuffy. Now it's too runny, which I guess what's supposed to happen, but yeah, it definitely hurts. But we are getting through it, and I think by tomorrow I should be all cleared up and officially good to go and recovered. Okay, so let's start off with the headline news of the morning, which I thought was really interesting last night when this news broke, which is Cathie Wood dumping a lot of stock. Like a lot of stock for something that I didn't even know existed, quite frankly. But something that obviously she's playing in a really interesting way. We've also got some Tesla news in regards to India. We'll talk about that in a second. So let's get into what Cathie did, and then we'll go from there. Did you get a flu shot? I think I got a flu shot like in 2020. So I don't know if that's still effective. I don't think I had the flu. I had the flu in 2020 and it was really bad. I think this was just like a regular cold that I was, maybe I went outside. I had some shorts on and I just caught it like that. So should be okay. All right. So ARKW, which is their next generation internet fund, not the most important fund in the ETF, but a fund nonetheless. She sold a lot of shares. I mean, if you're just looking at it on the screen right now, 100,000 shares of Palantir, 125,000 shares of Roblox, 231,000 shares of Square, 148,000 shares of Coinbase. Like, she's been selling a lot. 47,000 of Shopify, 130,000 of Teladoc. Now, why did she sell all of these shares? Well, she bought Bito, which I didn't know was a thing, but she raised a ton of capital to sell 4.3 million shares, or to buy 4.3 million shares of Bito. Now, what is Bito? Okay, what is Bito? Bito is a Bitcoin Strategies Pro Shares Bitcoin Strategy ETF, as you can see on the screen. Year to date, the sucker's up 100%. And in the past 3 months, it's past 6 months up 26%, past 3 months 50%. Now, why is she doing this? This, to me, is one of the most bullish things that you could be hoping for if you believe the crypto spot ETF for Bitcoin is going to be approved. why is Cathie buying 4.3 million shares, probably at $20, right? So a decent amount of cash into this Bitcoin strategy ETF if she doesn't think there's going to be some allocation of or some approval of the Bitcoin ETF, which is going to cause this thing to theoretically skyrocket. I mean, it's up 100% year to date. It's up 50% in the past 3 months. I don't know really what the impact of the ETF is going to be on something like a ProShares Bitcoin strategy ETF that's already primed and ready to go, but it is up and the volume of it is up dramatically over the past couple of days because of this idea that on January 10th or January 5th, whatever the day is going to be, there's going to be this approval of the ETF. So whether, you hate crypto, love crypto, whatever your thoughts are about it, she sold a lot of companies. I mean, these are some decent companies. Coinbase is doing very well. Coinbase had 180 yesterday, absolutely incredible price at 187, to load up into ProShares Bitcoin Strategy ETF. And honestly, I think it's the right move because if she's correct about her thesis that the Bitcoin ETF is going to be approved and then, there's going to be a ton of institutional volume coming in and you're going to see a massive influx of capital and liquidity entering into these Bitcoin ETFs that exist. Well, maybe there's a lot more alpha going into 2024 in something like a ETF that's, really hasn't moved as dramatically as a Coinbase, which is up almost 4x for the year versus this that's up, 100% for the year. So it's an interesting move. Definitely makes sense why she sold Palantir. Palantir has not been moving. I think her average on Palantir in this account was like $12. So she took a little bit nice. I think she has enough Palantir still in this ARKW fund, but definitely took some profits there. Coinbase, she's not break even overall because she started buying at 250, but she bought enough in the 30 to 40, 50 range that she is now break even, or not break even, but she is making a profit on some of those shares on Coinbase. So overall, that is what she decided to do when it comes to her strategy on the Bitcoin ETF. Now, I think the only reason I'm bringing this up is because I think from an institutional perspective, it seems likely that other fund managers are trying to figure out, okay, how do we get the best sort of alpha? And this is a question I asked on Twitter yesterday. If you're a fund manager and you're looking at the competitive landscape in terms of beating returns from 2023, which is your job as a fund manager, you want to beat the previous year's returns and you want to make sure clients continue to give you money. If you've gotten them 5% all year because you put it in a money market fund, you really haven't done much for them. So the question becomes, where's the alpha into 2023? We've talked about small caps. We've obviously talked about regionals, talked about sectors that really haven't had the alpha that big tech, large cap tech has had. The Bitcoin stocks, the miners and the ETFs and the Coinbases of the world, the brokerages, the Robinhoods, the SoFis, these might be some of the other plays that managers are setting themselves up for. And Cathie obviously setting herself up for that in the context of the BITO ETF. Brian says, are you concerned that all the people who would consider taking profits with companies like Palantir are waiting until 2024 for tax return purposes? I mean, I think they would be selling it right now, right? So, you're saying take profits. So yeah, I mean, look, that's definitely reasonable, right? So basically your argument is, okay, I'm sitting on 100 grand of profits for Palantir. I don't want to show those profits in 2023 because I already have, too much going on. So I'll sell it in 2024 and deal with those taxes in 2025. It's very reasonable. Very reasonable. I think that could happen to the entire market. A lot of people might be just willing to inch it out a couple more days and then finally take some profits. I actually haven't thought about that for a while, but yeah, that's a very reasonable thing that could happen. I just think, and again, this is what we've been talking about for the past couple of weeks, which is just where the hell are you going to put your money? Taking profits is fine. But once you have some of those profits, unless you're paying off some bills, you now have to allocate that capital. If you're just going to put it right back into the market, well, now if you're going to put it into a sector that you have less exposure to, it's more undervalued, then that makes sense. But if you're just putting it right back into the market, then, maybe it's not going to be the best thing to sell right now. So nonetheless, Cathie Wood rebalancing the portfolio, deciding to allocate some capital in a different direction. Let's get into some macro news as well. And talk about what we've got going on with the jobless claims. So we've got jobless data coming out this morning. Where am I looking at? Okay, here we go. Jobless claims that we're looking at. And they came in kind of in line with what we expected. We now have 1.875 million jobless claims in the United States. That is up from 1.861 million. So up about 12,000. So in the week ending December 23rd, the advanced figure for seasonally adjusted initial claims was 218,000, an increase of 12,000 from the previous week's revised level. The previous week was up 1,000 from 205 to 206. So the 4-week moving average was 212,000, a decrease of 250 from the previous week's revised average. The previous week's average was revised up by 250 from 212 to 212,250. Basically, we're not increasing the jobless claims in America at a geometric or exponential rate. which means it's not a rate that anyone should be concerned about. So 12,000 jobless claims is really nothing in the grand scheme of the overall economy. And so the reason the market's green right now in the pre-market, and why S&P is up, Nasdaq's up, is kind of like the market's like, all right, so I guess unemployment's not an issue yet, at least for now. Unemployment is not becoming some massive issue. Unemployment's still at 3.7%, hasn't inched higher, under 4%, which is good. The Fed kind of wants it at 4.1 to really kill inflation, but I think there's a lot of data saying we might be able to kill inflation without having to get people out of work. So it's kind of like the market, 5 months ago would have wanted a really tough job claim number of hundreds of thousands of people lost their job or filed for unemployment, because that would justify the decrease in inflation, which would be good for stocks. So bad news was good news. That has shifted ever since Jerome Powell's pivoted, and really it shifted a month before he pivoted, to the point where the market started reacting positively to good news, because you don't want to see the economy go into such a massive slowdown. And how does that happen? People lose their jobs, and then the consumer gets weaker. And so as a result of that, you're seeing unemployment kind of stay stable at that 3.7, 3.8% range. There are still 8.7 million jobs open in the United States of America. If you want a job and have some relatively decent skills, you don't have to be a computer programmer, but you also don't have to be someone who's super, super intelligent. You just have to be someone who could be a good employee, and you have to be willing to apply. And there are a lot of jobs out there at the end of the day, regardless of the degree you have. So from that perspective, it's a thriving job market until it's not. And so far, the data we're getting is not showing that it's not going to be necessarily a thriving job market yet. Living on Smoke, sup, folks? Amit, keep rocking it. Looks like you're doing better. I am doing better. Thank you for asking. Johnny Mac, thank you for asking as well. Doing a lot better. Just got a runny nose, but doing a lot better. And the market open always wakes me up, so I'm happy to actually wake up on time for that. I was so pissed off yesterday waking up. I was annoyed. I was very annoyed. But we're up today, and we are ready to go. Let's get an update from Greg. This is someone who's been bearish this whole year, Greg Branch. He's been incredibly just annoyed at how the market's performed. He's been collecting his 5% on the side. Let's get his perspective on what he thinks is happening as we're getting into the end of the year, and why markets are continuing to not do too bad.
Results are delivering out. The investor survey brings together the market intelligence of the nation's leading institutional investors. That you were wrong in 2023 and that the cycle didn't play out exactly as you expected, which I think is kind of conventional wisdom, although I don't know if everybody would actually admit that. But you are saying, as you look ahead to Q1 24, that you think it will play out actually a lot like Q1 22 with a sharp correction. Why is that?
Well, Leslie, the question becomes, is it that it didn't play out and it won't, or that it didn't play out yet? And I think it's the latter. I don't think it's the former. And so normally when we see the Fed raise like this, what we see is a dearth in credit growth. And we saw that. But we didn't see businesses stop spending, and we didn't see consumers stop spending. And I think it's important to identify the reasons why. Number one, we had a substantial growth in private credit. Number two, the cash to asset ratio of the S&P 500 is at or near historical highs. And so businesses had a lot of runway from the savings from the pandemic. Businesses had a lot of runway, and consumers had a lot of runway from the stimulative actions we saw in 2023. But that runway is limited. And so I think that we will see the cycle play out. It's just that the duration between the dearth of credit growth and the spending is much more elongated than we've seen historically. And I think we're starting to see that on the margins with small businesses.
So from his perspective, the point he makes about small businesses, United States bankruptcies have gone higher. So his argument is kind of no one wants to sell it off until the end of the year, but if you give it enough time, we will see that sell off. And it's just a matter of time until the cycle plays out. Now, I don't know if, the logic is necessarily the best here, but the argument is that it is inevitable and it's going to happen.
What limits that runway? Because you look at the Goldman Sachs financial conditions, currently they're at easier levels than they were even back in 2022. And then if the Fed ultimately does pivot, as the swaps market would indicate, that's also potentially decent news for stocks as well. So what is it that you think could really get in the way? What are the obstacles that you see kind of derailing the directionality of the market right now?
I think you said the key word, Leslie, and that's the Fed. I think much like I predicted in 2021, we'll see a difference between the Fed's posture and what they're forced to do. The economy is growing at 5%. Unemployment's at 3.7%. The NIFB survey indicates that businesses continue or expect to continue to hire. And so I think the Fed has a problem, particularly with what they told us last week. I think the Fed's problem is that there's really no visible way to get from 4% to 2% as long as unemployment remains where it is, and as long as the indications for services inflation remain rather strong. Remember, core bounced back into that 30 to 40 basis points month over month rise.
Yeah. So again, from that perspective, it's really a question of, do you believe the Fed can't get from 4 to 2%? And the data I'm seeing, and I'll change my mind when I see different data, is it is more likely than not we get to 2% this year. Just given some of the macro data that's coming out. That may change. That may change in the next couple months. But we haven't even factored in the lagging indicators of shelter and housing that have come down pretty dramatically over the past 3 months. But the Fed looks 6 months into that particular type of data. When that comes in, along with energy, I know you guys are looking around if you're not in California. Which, by the way, I will be in California January 9th. That's officially confirmed. I told you guys I was going to California. So I'll be in California January 9th and the 10th, literally for one day. So if anyone wants to get some coffee, hit me up. But it'll be on me. The gas prices are coming down really well, right? Like everyone's seeing at least under $3. That's why I said, except if you're in California. California's probably still like $4, maybe $5. But in Midwest, eastern parts of the world, we are in the United States, we're seeing gas prices come down. We're seeing the energy index fall. So we've already got that part of CPI resolved to an extent. And as long as, the Red Sea crisis is contained, which it's starting to get contained now as well, that'll be okay. So now the question is, what's the next indicator? And shelter is going to be that next thing that plays into CPI. And when it comes in, I don't know if we get to 2%, probably like 2.6, 2.7. And then that final, the basis points from 2.7 to 2, we got to get to. But I think that's going to be a lot easier than, waiting the next couple of years to get down to 2%. So we'll see where it happens. Where in Cali? LA. I haven't been to California since 2018. I've been to California many times in my life, like many, many, many times. I had a girlfriend who used to live in California when I was in college, so I used to travel back and forth a lot. But California, I used to just go there for like debate tournaments and stuff. But I haven't been since legitimately February of 2018. That was the last time I went. Yeah, 2019 I didn't go. 2020 we had COVID. 2021 I didn't go. 2022 I didn't go. 2023 I didn't go. Yeah, so this will be the first time in almost 5 years I'm going to California. So it's been a while. But excited to check out California. But again, gas prices probably haven't come down there, haven't come down too dramatically in Nevada, but in other parts of the world, we are seeing levels of inflation come down, and we're seeing it in energy. Now the question is if we can see it in rents, and if we can, then we're going to be in a good situation. Let's move on to when did Kelly live in Cali? You're funny, Johnny. You're funny. Let's move on to Palantir. We've got a bunch of little Palantir updates I want to talk about. So let's talk about Palantir. And then we got to talk about Microsoft. We got to talk about Tesla. We got to talk about a variety of different things that are going on with some of these larger tech companies. So first of all, we have an update on, this is Palantir and SoFi combined. We have a new short report update. Not like a real short report, but you know what I mean. Like a short float update. Okay. So here we go. Shorts on Palantir and SoFi. I'm sorry, guys. I just had to blow my nose. That's why you'll see a little bit of a gap sometimes when I'm talking. Just gotta wipe my nose a little bit on this towel. Okay, so SoFi and Palantir. So first of all, the shorts are starting to cover, and they're starting to cover in a pretty strong way. I mean, they're not covering like huge, but they are covering, and that's why I think we saw the rise in SoFi over the past couple of weeks. So Palantir now has 108 million shares sold short. Last week it was 122 million shares sold short, which means 5.95% of the float is short, where 6.5% of the float was short 2 weeks ago. And 2 weeks before that, it was closer to 9%. So we've come down from about 9% to 6%, which is not bad at all when it comes to Palantir and their short report coming down. Okay, so that's a 10% decrease from 2 weeks ago. SoFi, this is the interesting one. I did not expect this, but this explains the rally we've seen, at least to an extent. SoFi is still 14.5% sold short, but it was 16% 2 weeks ago, which means instead of about 150 million shares sold short, about 25 million of that covered. Now you're at 128 million sold short. So there's still a massive short float on SoFi. SoFi has like a 900 50 million outstanding shares, close to 1 billion shares, and 14.5% of the float is short, 128 million shares, but it is decreased, and the shorts had to cover their shares. Now, we saw SoFi is up 40% in the past like 3 weeks. So, I mean, you're up 40% in the past 3 weeks. A lot of shorts, they get scared, and they probably are like, we're not going to double down on this because we have no idea where the market's going. I think there's a significant amount of shorts that are thinking of doubling down, and they just think this whole market rally makes no sense. On Palantir, we just haven't seen a lot of buy pressure. So even though the shorts have been covering, the buy pressure hasn't been there, which is why Palantir has been relatively flat. But this is nice to see that Palantir and SoFi are both having their short floats come down before getting into the end of the year, which is a good thing at the end of the day. Sorry for the dumb question, but what do you use to track the short interest of a stock? Real baby Pluto, no worries of that. That's not a dumb question. This is from the Wall Street Journal. So every 2 weeks, it's not just the Wall Street Journal. That's just what I use. But a lot of these media outlets report the shares sold short. I think your brokerage, like a Trading View or a Webull, shows this data as well. I usually just get it from like one of these media companies because they just publish it in an easy way for me to consume. But yeah, I think it's in a lot of the brokerages. I know Robinhood doesn't show it, which Robinhood should show it. That would be nice. But a lot of these guys just end up showing you what the short report is after every 2 weeks when they figure it out. So short report is coming down. Now, on top of that, we got a deal from Palantir last night that was revealed by Lord Grimm. Again, really good Twitter account. Recommend following for Palantir. Matua partners with Palantir and will improve its data efficiency. So no one reported on this, because this was an article published in Spanish on December 21st, 2023. So, I mean, like, no one really knew about it. And then Lord Grimm kind of figured it out on Twitter. They just like auto-translated, and he's probably Googling the crap out of Palantir and found this article. But let's read a little bit from this. The agreement signed for 6 years will allow the insurer to integrate the technology software with the aim of enhancing the decision-making of different departments. The agreement between Matua Madrilena and Palantir will be made public in the coming days. Palantir and Matua have been in development for months, but the Spanish insurer, so it's a Spanish insurance company, needed to understand its usefulness, and to do so, it has been working on a pilot test and several use cases related to the contract of investment funds, pension plans, and saving life insurance. In this test, 548 million records from 5 different data sources have been used with the aim of simplifying all that information so that the business areas involved could access the data they needed at all times, answer complex questions, plan scenarios, facilitate decision-making, etc. So, seems like a very basic kind of Foundry-like deal. Maybe there's some AIP there, but it seems like just implementing Palantir's basic software into an insurance company and helping them make better decisions from all the aggregate data that they have in order to drive efficiency and operationalize their workflows within the company. I'm going to do more research on this. I'll do an episode of Daily Palantir. I haven't been able to get an episode for the past couple of days, just been way too sick. Might be getting out one today. And I'll go deeper into who Matua is and why did this partnership happen. But the reason this is significant to me, and the reason I like seeing this, is because we are finally getting some more international commercial deals. Okay. This is the fourth international commercial deal we got in the past 5 weeks. We got Fujitsu in Japan, extensionship. We got Plascred, which is in Canada. We got this Matua, which is in Spain. And then we got one more that I am forgetting. It's on the tip of my tongue, but that was also an international one. Which one was it? It wasn't. Oh, it was Unicredit in Italy, the bank. So, I mean, we are seeing a lot more commercial action from Palantir internationally, which is really good because international commercial growth, quite frankly, has been bad. Code Strap on our end of year podcast. This was done about a week ago. You can check it out on the channel if you just click live on YouTube, and you'll see the Palantir week in a year in review. His biggest concern going into 2023 or 2024 was that the growth just hasn't been there to justify the multiple. I mean, he's publicly said that he thinks that the multiple is getting up there. And if Snowflake's valuation is crazy and they're growing at above 30%, how is our valuation not at least somewhat crazy and we're barely growing above 20%? And so we ended the pod with him saying the one thing I want going into 2024 is a monster NVIDIA-like growth quarter. I don't know if that happens in this interest rate environment going into 2024. Because at the end of the day, interest rates are still high. I mean, we haven't gotten a cut yet, even though the Fed has said they're going to pivot. And so the business cycle needs to be supported by the Fed in order for companies to continue to allocate spend on things like software, which means rates have to come down, right? Because not every company has no debt like Palantir. And then on top of that, boot camps have to be working. So I think there's a lot of things to monitor, and obviously we'll be monitoring it very closely and in depth going into 2024. But they guided for about 19% growth going into Q4, about 604 million of revenue. If they beat that to like 620, 630, you'll get closer to that 20%. If they don't, then the question becomes, what's the guide for Q1 of 2024? And if that's not closer to 20%, this multiple is going to be in a tough situation. I think he said hyper growth. Yeah, that's what CodeStrap is looking for. He's looking for massive hyper growth. And until we get that, this valuation is going to be a little tough to justify. So that is the news on Palantir. New partnership. Shorts are starting to cover. We will see what happens going into 2024. Major catalyst for 2024, obviously S&P 500 inclusion, the Titan contract, which is going to be a big contract if we land it, which I think we will land it, or at least land half of it. 1.5 billion over 5 years. So we will see how that plays out. I'm very confident we will get it. I can't guarantee anything, but I just don't know who else they would give it to if they don't give it to Palantir. So that'll be two things to start off the new year with, and we'll see how it goes from there. Let's take a look at some of the equity markets. So we've got a lot of companies that are down, and the companies that are down are MicroStrategy down 2%, Marathon down 7%, Riot down 1.88%, Coinbase down 3.3%, and CleanSpark down 6.92%. This is because Bitcoin is down about 1.52%. Bitcoin at 42,680. What was really weird yesterday after hours was that all of the companies I just named, the Bitcoin miners, they were rallying in the after hours. I mean, they were up another like 1%, 2%. It was pretty that's interesting. Even Cypher, this is a new one we talked about, now below $5, down at 5.31%. I don't know how long they're going to be red today. But it just like clockwork, right? Bitcoin falls, these guys fall. Bitcoin goes up, these guys go up. And it's kind of just like if you're trading it back and forth, there is money to make on the downside and on the upside. But after hours yesterday, their price action was a little interesting. And even Robinhood at $13.72 after hours yesterday. I was just like, what is going on? There was just like a lot of momentum here. But by the time the markets woke up, in the pre-markets, a lot of people just decided to sell off all this stuff. Now, what's really interesting about this is I don't know if this is a dip that lasts long, because people have been dying to get into some of these names. I mean, there's a lot of volume that's chasing Coinbase, that's chasing a CleanSpark, that's chasing a Marathon. And if you still believe Bitcoin hasn't even, hit its all-time highs, still at 42,000, is waiting to break out the halving event, the spot ETF approval, all that stuff, which is the, sort of core catalyst to get Bitcoin closer to that $70,000, $80,000 range. These stocks are not going to be $13, $185, $18. These stocks are going to, likely go much higher from here. So I think these dips are interesting. I don't know if the dips last, because within a day, going into 2024, momentum changes, narrative changes, and CleanSpark back at $8. I don't know if we get that. CleanSpark back at 10 is very possible, but people want to get it before CleanSpark gets to 30, which is what they think it can get to. Last time it got to 42 at the top of the Bitcoin cycle. So these stocks are red right now in the pre-market. S&P is green, Nvidia is green, AMD is green, Intel is green, Palantir is red, a little bit down 0.11%. We've got Celsius is up at 55.80 right now, up 0.14%. SoFi is red, 10.27. Robinhood was red as well. Robinhood broke through like 13.45 yesterday, had a lot of volume, but then it just got completely chopped off. Now at 13.06, down 1.5% right now in the pre-market. So a lot of these companies definitely came down and came red as well. Did you speak about Cathie selling Palantir for Bitcoin? Yeah, we talked about that at the 3-minute, 2-second mark, Cathie Wood and her sells. Look, I think Cathie Wood made good sells yesterday. If she believes that this BITO, which is the thing she bought 4 million shares of, is going to moon when crypto moons, right now it's at $20. It's up about 100% year to date. If she thinks this thing is going to $40, $50 in 2024 just because of the influx of liquidity and volume that's coming in on Bitcoin, then, you might as well sell some winners that are up 400%, like Coinbase, and allocate to something that's not up that much. Now, one interesting thing about Robinhood before we get into big tech and how they're performing and if they can continue the performance, and then we'll talk about Microsoft as well. I looked at their Q3 numbers back in 2021, which is like their best quarter that they had, either Q2 or Q3, one of those quarters. And I was shocked at what I saw. Out of the transaction revenues that they were able to create, 233 million. So call it like 55% of their overall transaction revenues was not equities, was not options. It was crypto. And that is what gives me more confidence that when Robinhood is, when crypto does well, Robinhood is one of the main beneficiaries. Obviously, Coinbase is going to benefit way more than Robinhood, but at the height of the bubble in 2021, where we, now we can all look back and say it was obviously a bubble, their equities volume was not actually higher than their crypto volume. And you know, I know 2021 when we were crashing slowly throughout the end of the year, and 2020 was a lot better, but we only have public numbers from 2021, and crypto was making up the majority of revenue. So it'll be really interesting to see if crypto does it again for Q4 and it beats equities, even though we've had the rate cut or the pivot to the narrative of rate cuts. And, you know, obviously equities have done very well in the past 2 months, which has been the past 2 months for Q4 for Robinhood. Or if crypto really is the catalyst, because I like Robinhood because it's a business outside of crypto. But if crypto is the core catalyst, then crypto is very much attached, or Robinhood is very much attached to the success in terms of its transaction revenues of cryptos doing well. The other little piece of DD I have in Robinhood is that I was reading last night in some chat boards that people have not been able to get to customer support. Now, I didn't have that experience. I got to customer support very easily. It wasn't over the phone. It was just through chatting. Their AI chat thing worked really well for me. But one of the ladies who was not able to get through customer support, she was saying that when customer support finally got back to her, they apologized because they just can't service all the requests because they have so many people that are transferring into Robinhood that are just bringing their brokerages onto the platform. And so I think it is something to say that maybe they're not gap profitable because they're just paying so much to acquire these customers. But I mean, you're paying 1%, 5% APY. You're paying a decent customer acquisition cost to get someone that's going to use your platform likely for at least the next 2 years. That's their minimum requirement. And then you're going to be able to make that money on the back end with cash sweep when you have their cash on the platform. So they are getting an influx of capital. And I think if they can somehow squeeze out gap profitability in Q4 with the increased transaction revenues, and if crypto, you know, Bitcoin does what it does over the next couple of 90 days in terms of the next quarter, it's going to be an exciting Q4 for Robinhood. But the question is simply is, you know, are they going to be able to pull that up at the end of the day? Okay, let's get an update on big tech. And if it is hard to justify the rally that big tech has had this year, this is Carrie Firestone in terms of what she thinks around what's going for mega cap tech.
Picture when it comes to futures. Want to get a sense on how you see this day shaping up. What is your WEX word of the day?
Well, the word of the day is justified. And we're using that because in order to think through next year and what we want to own, after such a big year, I mean, this year has been phenomenal for stocks with dividends. We're looking at close to 27% return for the year. So to hold a position, we really have to justify it to ourselves. Does it really deserve to be part of the portfolio? Is the price justified based on its earnings and future growth and valuation? So that's the word. It really means we've got to look carefully at what we own, whatever we buy, and think about whatever we should sell because we can't justify owning it.
So, Carrie, I also want to get your take on the latest Delivering Alpha Investor Survey and outlooks and strategies for the first quarter and even beyond that. So the nation's leading institutional investors, top strategists, and our own CNBC contributors like you being asked which of the Magnificent Seven stocks will post the best returns in 2024. 44% saying Microsoft, 24% saying Amazon, 12% saying NVIDIA, just 8% saying Alphabet.
This is really interesting. So they interviewed a bunch of CEOs and like contributors and tech analysts, and wow, 44% of analysts think Microsoft's going to have the best returns. You know, that's the easy answer because AI and OpenAI and, you know, that's the easy answer for them to pick. 8% said Google, and Google has the lowest PE out of all of them. Wow, that's incredible. Let me know what you guys think in the chat. Which one of big tech is going to have the best returns in 2024? I don't think it's Microsoft. I'll go on the record. I don't think it's Microsoft, but I could be wrong. But yeah, let's see what she has to say.
And Apple, Meta, and Tesla, they round out the list with just about 4% of votes each. What's your take on this?
Well, the average return of that group was about 75% this year. I mean, at least that much. So if you're talking about what do we think is going to be the best performer of a group that was up that much, it's really hard to, again, justify that those stocks move much this year. I would actually pick Amazon, not because I think Amazon is selling for a valuation that is less expensive. It's 31 times 25 earnings, which, you know, isn't bad for Amazon. But we think that a soft landing is extremely good for Amazon, and the consumer is going to hold up better.
I think she might be right, to be honest.
In 2024 than people had thought. But I think it could be a relatively muted year for those stocks. They were so strong this year. The rest of the market has to carry the S&P higher. It's not going to be these names again. They were just so great. Everything worked well for them. So I'm giving you Amazon, but that's really with kind of a low bar of confidence.
Really a low bar of confidence. So does that mean that you think that the market's going to broaden out for another strong year, or you think it's going to not, next year won't be as good as this one?
I think the market already is broadened. We've seen what happened in December. Up until the end of September, about 85% of the returns of S&P came from the Magnificent Seven. And that's huge, 85%. The rest of the market was up about 2%. Now the equal weighted S&P is up 11.5% year to date. So there has been a move, and other stocks have outperformed the Magnificent Seven. That's going to have to continue, we believe, in order for the market to go higher.
Okay, so a lot of you in the chat think Amazon as well. Some of you say Microsoft, Google. I think Google or Amazon are just because they haven't done as well. Microsoft hit all-time highs in 2023. Google has not done that. Neither has Amazon. Microsoft is so interesting, bro. These fund managers really picked Microsoft. Dan Ives also, speaking of Microsoft, let's do the OpenAI discussion. Thank you everybody for being here. We've got 9 minutes until the market open. Headline news of the day: jobless claims came out. 218,000 more jobless claims. Unemployment still at 3.7%. Market kind of expected it, so not too much surprising macro data around jobless claims. So market is green in the pre-markets. OpenAI is being sued by the New York Times. Okay, and I actually did a decent amount of research on this yesterday to try to get a good understanding of what is going on here. But these fund managers think that Microsoft's going to get the best returns next year out of big tech. Microsoft's going to have to resolve the fundamental problem that I think a lot of these AI companies are dealing with, and Microsoft has to deal with this because they own 50% of OpenAI, which is, how do you get the data to train the models to allow LLMs to be useful? I think all of us now have interacted with some type of LLM, whether it's Claude or ChatGPT or Bard or in some capacity. And the whole point of an LLM is to make our lives easier, more effective, efficient. We get an answer immediately and we can be more productive, which in turn should help GDP globally, because if people are more productive, they can do more things, they can start more businesses. You know, you can just generate more alpha, generate more productivity, generate more revenue, cut more costs. Now, in order to do that, the LLMs need to be good. A lot of the problems over the past couple of months have been LLMs have hallucinated. They haven't had real-time data. They have not been good. So we saw the potential, but we didn't really get the full extent of that potential. Apparently, OpenAI indexed the New York Times is like millions of articles that they've been publishing online digitally since the 1800s. And the ones that they used to do on paper, they put them onto digital print back in like the 2000s. And so they trained a lot of their models on this data. Now, why do they need the New York Times as content to train their models? Well, the New York Times, you can have whatever opinion you want on it, but it's a news source that has just published breaking news and stuff like this for a very long time. And so LLMs, to gain a sort of sense of understanding of the world, the New York Times has been one of the biggest media organizations really for the past 200-300 years. It's a $8 billion public company. People don't know the New York Times is public. You can type in New York Times on your brokerage and you can buy their stock if you want. So from that perspective, it makes sense why they index their content. The New York Times filed a lawsuit, and I was reading through a little bit of it last night. And the nature of the lawsuit is, hey, we're not getting paid for any of the content you used. We paid the people to make that content in terms of the journalists that we had to compensate to be able to create those articles. And you're not giving us discovery or distribution, meaning the reason why the New York Times doesn't like sue Google for like showing up their articles on search results is because Google is not really making money off that. I mean, they're indirectly making money off being a search engine and then selling ads, but they're not literally making money off that. They are just a gateway portal of discovery for distribution for a lot of this content. This is why Twitter and Elon Musk's Grok is able to basically take all of this proprietary data, which are the tweets that are posted on Twitter, and then train that LLM in such a significant and sophisticated way, because when we sign up to Twitter, we are giving up our tweets as basically the property of Twitter. Same thing as YouTube. The reason YouTube can train Bard is because YouTube is the world's largest library and repository of information. Just if you take the transcripts of the billions and billions of videos that they have. And when you post a video on YouTube, when you sign up to YouTube, you are giving YouTube the right. I mean, Google can literally advertise against those videos, even if you're not monetized, because Google has the right to do whatever they want with your video, including take it down. So because Twitter can train their Grok off their tweets, YouTube can train Bard off their videos. These networks have privatized and centralized all of that data in one place. And as a result, they're able to train their models. ChatGPT and OpenAI, they don't own any content. They don't have any user agreements with users that use their network because they don't have any social networks, right? They're just a bunch of people in Silicon Valley that scraped the web and took all the data. And as a result of that, the New York Times, which I think has a hell of a point, is just like, wait a second, you can't do that. Like at the end of the day, you need to compensate us something if we're going to give you all this data. I mean, we're the ones that are producing the data. And I think it's the right thing to do. I think either there's going to be two scenarios for this. And this is something that Microsoft's going to have to figure out. Either Microsoft's going to have to pay for content. And, big tech historically has never had to pay for content. I mean, they pay for the ads. Like YouTube has to pay creators for ads, but they pay when they get paid. Right? It's not like Netflix that has to pay, $10 million for a movie, and maybe the movie will do well, maybe it doesn't, maybe it drives more subscribers, maybe it doesn't. You're taking a risk. Every media company is taking a risk when you pay a journalist to write an article, and maybe that article monetizes or not. But when you're a user-generated content platform like a TikTok, Instagram, Facebook, you don't pay. I mean, this is why these companies have become so big, is because you don't have to pay for shit. Facebook has never had to pay for content. All they have to do is pay for the servers and the infrastructure. Now, it's a very hard thing to do. It's very, a lot of technology involved. But at the end of the day, everyone's posting willingly, and they have so much content that, I mean, look at what happened when Joe Rogan went to Spotify. YouTube didn't give a shit. YouTube was like, see you later, buddy. Like, YouTube's like, we got a billion other people trying to be Joe Rogan. You think we care about you leaving, right? They just have so much content. And so I think at the end of the day, if Microsoft wants OpenAI models to be updated and strong and sophisticated, this is why they signed a deal with The Athletic a couple of weeks ago, and Axios and Politico, to be able to cite their sources and kind of give better real-time data. I think either they're going to have to pay the New York Times, or they're going to have to not index their content to be able to build their models in a different way. But then that begs the question, whose content are you using? You've got to use somebody's content. Or we're just going to pass regulations saying that it's okay for these large language models, because they're public entities, to be able to just index the web and use all that content, even though that content is being monetized or it's behind paywalls, et cetera. But these big tech companies can steal it and then just use it for their own resources. I don't think that's the best thing, for us to see as a society. I do think media companies deserve to be paid. I mean, just think about it. If you're a journalist, forget the New York Times. If you're a journalist and all your content is being used to train this model from this big tech company that's getting paid hundreds of millions of dollars every year from consumers using what you built to train their model, and you're not getting paid a cent for that, I mean, that sucks. That's a tough thing to deal with as a content creator. And it also is the one thing, you thought AI wouldn't commoditize content creators because, content is kind of like, AI can't, match my personality and stuff like that, right? That was kind of the underlying thesis behind it. Well, if the big LLMs can just steal your content, and then your content is basically turned into a chatbot, I mean, dude, you're commoditized. Like, AI is coming for everybody. So it's going to be really interesting to see how that lawsuit plays out. I think there will come to some type of settlement agreement. I don't think ChatGPT wants to steal content, right? I don't think OpenAI wants to do that. I think they want to have a good relationship with a lot of these companies. But the problem is, we got market open in 2 minutes. The problem is, if they give the New York Times, I don't know, $100 million a year, then CNN's going to say, well, we want 100 million. Fox is going to say, hey, but we want, all these media sources are going to be like, wait a second, you're using our content too. So either use our content or pay us, right? And it gets into a slippery slope. This is why Google never decided to pay for content. In fact, that's why, I think Facebook left Canada. I don't know if they're still banned in Canada or not, the news part of the Instagram and Facebook feeds, but they basically said, if we start paying for content, everyone's going to want a piece. And we are giving you guys discovery and distribution. You post an article on Facebook, it could get 1 trillion clicks. That's why you post it on Facebook, not because Facebook needs you to post your content on Facebook, because trust us, Facebook has plenty of content. We don't need you to post anything. ChatGPT is not Facebook. OpenAI is not Facebook. They're not YouTube. They're not Twitter. They're not TikTok. They don't have user-generated content. They actually do need the content to train the models. And, as I've been experimenting with LLMs, if you don't have the content, the LLM is useless. Like, if you don't have the data, it's just, it's nothing. So it will be very interesting to see how this ultimately is resolved over the next couple of weeks. Okay, cool. So we've got market open in about 50 seconds. Thank you, everybody, for being here with me. This is going to be a really interesting market open, because we have 2 days left in 2023. So we need to end off strong, and we got to see if we can end the year in the right way. Bitcoin companies are down. I'm really curious to see if they rebound or if they continue to fall further today. And overall indices are green, but we'll see if they turn red. And some of big tech, if they turn red as well, as they are green today. We've got a lot of other, end phase is red. We'll see how the market does going into, and obviously, it's been a hell of a year, been a hell of a month. You would imagine there's some profit taking right now, but we'll see how it ends out. All right, December 28th, 2023, last 2 days of trading, 9:30 a.m. Thank you all for being here. The stock market, once again, is open. Wake your ass up. Here we go. Let's get into it. End phase. 134.61, down 0.75%. Robinhood, 1307, down 1.43%. The thing Cathie Wood bought yesterday, Beto, this Bitcoin ETF, she bought 4.3 million shares. That is down 1.66%. SoFi, 1024, that is down 0.78%. Tesla, 264, that's up. Tesla's green. Microsoft is green, 375. PayPal is green somehow. Apple is green, 194. NASDAQ, 15,145. NASDAQ opens up 46 points higher. That's green. Bitfarms is down 5%. Cypher is down 8%. Beto is down 1.67%. What are the other Bitcoin names? CleanSpark. Let's see these guys. CleanSpark is down 6%. Oof. Okay. Marathon is down. These guys were up like 15% yesterday. Marathon's down 7%. And Riot is down 2.4%. Where's Coinbase? Coinbase below 180. Coinbase is at 179.68. So Coinbase is down 3%. So all the Bitcoin stocks are red. Bitcoin's at 42,768 right now. So that's why we're seeing some red on Bitcoin. S&P is green, 477.27. If we get 1 point higher, we are literally 40 cents away from all-time highs on the S&P. 478, 479. 478 is all-time highs. 479, we beat it. So let's see if we can get there. See if the market wants to get there if 2023 is that year. Nvidia trying to close in on $500, 497.68. AMD at 147. AMD's top was 167, so AMD trying to get to that 150 level. Intel at 50.84. Palantir 1750 opens up a little green today. Google 141.90. Google again finally breaking out towards the end of the year. Amazon 153. Meta 360. Wow, that's a 52-week high on Meta. That's a 52-week high on Meta. 360. My goodness. Oh my. Philip Rizzo says, it looks like Beto pays a 15% dividend today because it's an option strategy, which means she'd get like 13 million. Ah, that's interesting. So Beto pays a 15% divvy, which is part of the reason Cathie's likely interested and she loaded up the boat. Interesting. Okay. So that gives a little bit of a better understanding of why Cathie Wood bought so much. Meta again at 52-week highs right now at 360. Let's go to Coinbase. Where's Coinbase at? Coinbase 181. Okay, so Coinbase recovering. So the dip got eaten up on Coinbase. It was down 3%. Now it's down 2%. So people are buying it up. You see that green candle starting to form. And again, this is what I think. I think like CleanSpark was 1250. Now it's 1275. People want these stocks, man. People want these stocks. I mean, people are looking to get some exposure on these names. And if they're looking to get some exposure on these names, today might be a hell of a day. Now, the problem is Bitcoin tanks to 37,000. These names are in the gutter, right? Yeah, I mean, it's like this is not the best day to get in, but you just don't know how to time it. So if you think Bitcoin stays above 40,000 at least for the next month or two before while the ETF gets approved and maybe that ETF really spikes it to the next level, so the 50, 60,000 range, these names are going to spike. So I think there will be a lot of buying on some of these names today versus just selling. Because people are going to want to, take advantage of some of the dips. So I wouldn't be surprised if we see them turn green in the next couple of minutes, quite frankly, in the next couple of hours. KRE regional banks doing well, 53.16. Let's check on our TFC. TFC was doing, oh, look at that. So beautiful. 37.33. Look at that. TFC was just doing so good yesterday. Now 37.33. Not bad at all. So we're seeing the regional banks continue to do well as well. Where's Baba? Dude, Tencent and Baba Baba's up 1.5%. Tencent lost like 43 billion in market cap when China passed those regulations the other day. The Chinese stocks are interesting. There's this popular YouTuber, Adam Koo. I don't know if you guys know about him. He was big on China stocks and he put out a video. I didn't watch it, but he put out a video like 2 days ago saying he's out of Baba and Tencent and all the China stocks. He's completely done. And this guy has been big on China for a long time. So that was really interesting that he's finally just had enough after those regulations that China passed around gaming and trying to, protect kids and all that stuff. So, I mean, you're seeing some people that are just like, this is ridiculous at this point. I'm just not dealing with it anymore. Robinhood 1309 down a little bit for the day, 1.28%. SoFi 1026 down at 0.57, but SoFi's holding above 10, which is really important because it is historically not held above 10 ever, like it for maybe a couple of days, then it's done. So we got to see it hold above 10. Where is Tesla? Tesla 264. Let's get into the Tesla news. Tesla has plans. There were some, this was at 3 a.m. This news came out and I was awake to see it. I tweeted it out. Tesla has plans to expand to the state of Gujarat in India and build a factory there. This was really interesting to see last night because we knew that Tesla was meeting, and Elon Musk, he had just gone to some New York City council meeting, and he met with Narendra Modi, who's I was about to say CEO of India. Dude, this the stock thing is getting to be the prime minister of India, basically the CEO, right? And he met with them. They were talking about giving them some tax breaks. Negotiations with Tesla are setting up a manufacturing plant in Gujarat, likely in a vibrant summit. So let's read a little bit from this. Tesla is poised to establish its car manufacturing plant in Gujarat, with the official announcement expected during the Vibrant Gujarat Summit in January 2024. The announcement regarding the same is likely to be made in the presence of Tesla CEO Elon Musk, meaning he's going to be in India. Gujarat, with its strategic location and favorable business environment, has emerged as the preferred destination for Tesla's manufacturing endeavors. The state government has been given the choice of Sandan, Bekarji, and Dholera to the company to set up its manufacturing plant. Now, a lot of people last night were like just tweeting, and they were saying, well, how does this make sense? Because if you've been to India, which I have been to India before, by the way, NASDAQ, we got 52-week high, 15,145 right now on the NASDAQ. You can't really drive electric cars. I mean, there's like horses and like rickshaws and their cars are so small. Like a Tesla Model 3, it's just like there's no space for that on the highways that are supposed to be one way, and you see cars going the other way. Like it's kind of crazy if you've ever been to India. Tesla doesn't need to sell them in India. Tesla just needs to make them, right? And so if Tesla just makes them in India and it's cheaper to make them, they have better tax breaks, less cost of labor than making them in a China or a Germany or a Mexico or whatever, even though they're setting up the Mexico plant as well. Then their costs can decrease and they can export them all across the world, right? At the end of the day, they need to ramp up production. That $25,000 car is going to happen eventually. And in order for that to become a reality, they need to have multiple factories all across the world building, what is next generation vehicles from Tesla. So it doesn't matter if they sell them in India, which I think they will be able to sell in India to some amount of the population, but they need to make them for cheap. And if they can make them cheap in India, then that's great news for Tesla. So it will be very interesting to see what happens in the context of Tesla and how they're able to play that out. But Tesla's green. I mean, Tesla's been participating in the rally over the past couple of weeks. They've been flat the past couple of months, and then Cathie bought. I think she knows how to time Tesla really well. And now you see Tesla in 263, up from 235, which is when I bought a couple of weeks ago, for Tesla. Okay, let's go to some of these Bitcoin stocks and see if they're recovering. Let's go to CIFR. This is a site for mining. This bad boy is now down 3%. It was down 6%. Coinbase, look at that. It was down 4%. Now it's down 1.4%. Riot's recovering. Marathon's recovering. Look at CleanSpark. Goodness gracious. CleanSpark was down to 1250. Now it's at 1290. This is I felt like it was gonna happen, man. I felt like people were gonna buy the dip today. I really did. I felt like it was gonna happen. I think people want these stocks. I think they do. And as long as Bitcoin doesn't tank, this is a good buy the dip day if you've been trying to get into miners. Now, you got to understand the volatility that if Bitcoin tanks, these suckers are tanking like there's no tomorrow. Like they will tank. But if it doesn't, then they can stay afloat. It's the most simplest investment thesis ever. Bitcoin goes up, these guys go up. Bitcoin goes down, these guys go down. And it's like if all of us, I don't know how many of you got in at the lows, but if all of us had just timed it a little bit better in October, we would be up like 3x in a month, which is ridiculous to say. Now, granted, there's a lot of risk associated with that, which is why it's hard to get those types of returns. But it's a pretty simple investment thesis now that the cat's out of the bag. The problem is, do you want to do options on these guys now that they have already 5x? Probably not. You kind of just want to buy the stock. So you got to really be careful here in terms of how you're thinking of generating returns, especially if you're trying to time the Bitcoin cycle. Square at $79 right now, $79.92. Snowflake at $198. Wingstop $259. Costco $664. Snapchat $16.95. $16.96. Snapchat flat over the past couple of days. Enovix $13. Roku $94. Opendoor $463. Paramount is green on the day. Lululemon $509. That's green. XLF finance stocks are green. Spotify $190. Spotify's been flat over the past couple of days. Shopify is red. C3 AI is red. Yeah, market's relatively flat. We got pockets of green, but nothing too crazy at the end of the day. Apple is green as well on the day. Palantir up 1.3. Yeah, Palantir's up 1.3% as well. Abhishek says, hey, India is the next superpower of economics in the next 10 years. Yeah, this is a good point, Abhishek. I forgot to say this. The reason why Tesla wants to expand to India as well, outside of the cheaper costs, India is a democracy. It's not a perfect democracy, but it is a democracy, and they value their democracy. Now, I know a lot of people that know much more about Indian nationalism can probably have qualms with what I say, but it's better than China in regards to being a democratic state. And so the odds of them like, doing something to Elon or getting really upset, or Elon says one wrong thing. And then, that's why Elon, for all the free speech isms that he talks about, he never talks shit about China. I mean, in fact, on a Joe Rogan podcast 2 years ago, Joe Rogan started asking him about China and free speech, and Elon very quickly kind of diverted the discussion. I mean, it was obvious because you can't blame him. The dude doesn't want to talk shit about China. He has a responsibility to shareholders, right? Like at the end of the day, he wants to make sure that Xi Jinping keeps his company intact. So I don't blame him, but for India, he's not going to have those types of same concerns because it's a bit more democratic, right? So that's the big thing. The other thing is just that if supply chains get flipped in a nutshell, or like overnight because China invades Taiwan, Tesla's going to have to leave China. I mean, I think every company is going to have to leave China. It would be really hard to justify being a public company and staying in China with your supply chain if they're invading Taiwan, just like they did with Russia and Ukraine. Now, maybe they do. Maybe they don't care. Maybe all the public companies are like, you know what? This is business at the end of the day, and we still have good, cheap labor. It would just be a decimating blow to the United States' legitimacy and hegemony, which is a political term for just like power. Because if biggest companies that are American continue to work with a dictatorship that's invading another country and allow their supply chains to operate, I mean, the United States ultimately has to be like, the United States has lost a lot of power at that point. China's gained a lot of power. So I think that's another reason to expand to India and really start to diversify at the end of the day when it comes to their manufacturing. So we'll see what ends up happening, but that is not too bad when it comes to China. Let's get an update from FS Investments on why 2024 is likely to be bullish and why a recession risk has dropped dramatically.
A closer look at the markets with Troy Gajewski, FS Investments Chief Market Strategist. Troy, it's good to have you this morning. S&P 500 sitting on about a 25% gain for the year. For most of this year, nobody seemed happy with it, right? It was the manner in which we were getting those gains. People said it was only 7 stocks. I'll tell you, since early November, it's been anything but that. The average stocks outperformed the index. You've seen cyclicals work. The eco-weighted S&P has actually a pretty solid 14% total return this year. Can it possibly stay good going into next year?
Well, when you think forward, given the fact that the economy remains incredibly resilient, and by the way, I wish you guys gave me the heads up. I would have wore a cool sweater today if I'd known ahead of time. But given the still incredible strength of the economy and the fact that, to your point, valuations to cyclicals and value have not quite caught up, it could continue. Our point now, though, is when you think of valuations, you had the 10-year drop from 5% to 3.8 very, very rapidly. Remember all the concern about budget deficits and funding, they've completely gone away. And you have multiples have re-expanded in the S&P to 20.4 times forward earnings. You're kind of at the tail end of this rally now, and you have to think of ways to diversify yourself, particularly when the correlations or the sensitivity between fixed income and equities have become so high. So yet again, we had, August, September, October, tough month for 60-40. And then November, December, it's been a banner way to close out the year.
It absolutely has. And it does seem as if there's been folks rotating into bonds as they really did have a tough stretch for about, the better part of 2 years. So maybe that kind of rebalancing type activity might be running its course. But how do you do that then? If you sit there and say you have to diversify in other ways besides just, allocating a bit to fixed income?
Yeah, well, it depends on the mandate, the asset allocation target. But if you think about alternative strategies now that look attractive, it's a great time to be a private lender if you have dry powder to lend into a liquidity vacuum.
And what he's saying right here about liquidity, I think, is also a really interesting point. His argument here about having massive amounts of liquidity that's on the sidelines is similar to what we've been talking about when it comes to money market funds, which is that there is a lot of money on the sidelines that can go to different places, whether it's private lending, whether it's equities, whether it's crypto. And because there's so much money in so many different directions, well, that money is going to try to find a home. And that home just might end up being some risk on assets at the end of the day, which might help us avoid, a stock market collapse that a lot of the bears think is going to happen in 2024. CleanSpark has, it's at 1290. It was just at 1312. So we just had a little bit of a red candle, but literally just breaking $13 when it was down a lot, barely down for the day when it hit 13. So again, we are seeing people buy up these Bitcoin miners. Robin at 1325, it's barely down now. It was down a lot more. Coinbase 182 was at 178 when the market opened. So far, market sentiment is let's buy the crypto companies because we believe in the narrative. And until that changes, we are not going to see that money start to leave. MicroStrategy 676 MicroStrategy just had a massive day yesterday. I mean, they were at 600 on December 26th. They're at 675 December 28th. So, I mean, they've bought more Bitcoin. Bitcoin went up and they're doing well in it. Palantir up 1.49% of the day. Look at that green candle on Palantir. Look at that. I have no idea why we have that green candle. I think just people buying it up. No kind of news that came out on Palantir. But 1774 right now on Palantir, trying to get back to that $18 level. And let's see if we get there. What's a good India stock? The Nifty 500 or 50 is like the core India index, which hit all-time highs in 2023. I have no idea what's the best India stock, but I do know that Nifty is basically their S&P, and they hit all-time highs, which is really, really good for India, which is, again, they're thriving. They're thriving a lot. And the question is just now when they're going to be able to allow more companies like a Tesla to innovate inside their company. Arthur says, what do you think of the ticker HSY? So you're talking about Hershey's. Ironically, Steve and I were on Finance Junkies last night. We stayed up to like 2 a.m. or 12 a.m. or whatever, did a 3.5 hour pod. And we talked about Hershey's. Hershey's is down about 20% in the past 6 months. I don't necessarily know why they're down. I think there's some earnings, I don't think there's anything fundamentally broken about the company, just like they missed some of their numbers. Market cap of $37 billion. Hershey's pays like a 2% dividend, 2.6. The big concern around Hershey's was that Mr. Beast and like companies like these creator startups that are innovating in the chocolate space would kind of take their money. I don't know if anyone has had the Mr. Beast chocolate. I'm going to try it over the weekend, but it's not good from what I've heard. It's really bad. And so Hershey's owns Reese's and Kit Kat, and they own a lot of these brands. I don't think Hershey's is going anywhere. It has been sold off. I have to look into why it's been sold off. I think this could be a good time to go long. I have no idea about the fundamentals. I do know it's been sold off, which is why I think you're asking, should you go long right now? I don't even know if it's undervalued, overvalued, but it is better to go long now than it was 6 months ago when it was at 250. So I got to do some research on this, but I'm going to get back to you guys with more research on Hershey's because look, it's an iconic brand. Their chocolate's not going anywhere and they pay a nice little dividend. Maybe it's like a little dividend play. And if this is kind of like a Verizon or a TFC where it's sold off dramatically for maybe no reason, I don't know what the reason is yet, I have to look into it, and there's capital appreciation along with a dividend, then that might be a nice little play to get into as well when it comes to Hershey's. Thoughts on Nike? So Nike, the problem with Nike, I didn't get to talk about them, but last Friday they had their earnings. Their earnings shit the bed on guidance. That was the issue with Nike. Their North American guidance is like 0% growth or negative growth. And the street wanted like at least 3%, 4% growth. And they're basically saying, yeah, we're just not going to grow in North America. They're growing in China. They're growing in some of the other places. But in North America and Europe, they're just not growing. I think they're still going to do like, $12 billion of revenue next quarter. That's what they guided for. They did like 13 billion this quarter, but they're not growing. And I mean, honestly, you can't blame them. I mean, what is so innovative about Nike, right? Like at the end of the day, they're not coming out with any new products or anything new. Back in the 2012s, they had the Nike app and there was so much innovation with the iPhone and how they were integrating. Now it's kind of like when I think of Nike, I just think of overpriced gym clothes. You've got brands like Gymshark, Lululemon, it's Adidas. It's very competitive. Nike, it's supposed to be a growth name. I mean, the dividend's 1.38%. You're not really seeing any growth. So you're not really seeing a high dividend yield. There's no reason to really get excited for Nike, in my opinion, outside of it's a stable consumer brand. And if the consumer is fucked in 2024, you're definitely not going to, get analysis on or any upside on Nike. So I don't know. Nike's not interesting to me. If someone has anything better to tell me about Nike, let me know. But their North American growth is bad and it's probably not getting better anytime soon. Under Armour as well. Yeah. Under Armour took their lunch. I mean, I just don't think of anything interesting when I think of Nike at all. Like Under Armour, at least I think of Steph Curry and, they're innovating in some of the technology in terms of what you wear on your shoes and all this stuff. Nike, I have no idea. I have no idea at all. Is Bros disrupting Starbucks? So this is a company Chris was bullish on for a while. I don't know. Bros is at 31. I think Chris called it at 25. So it is up from when he called it. I don't know, dude. I've never tried Bros. I never cared about Bros. Never cared much about Starbucks. I'm not a big coffee guy, so never got super into it. I think if you were going to invest in a consumer brand, I would pick Celsius over Bros, even though Celsius, the valuation is a little bit tougher, but the growth is way better from Celsius versus Bros. We were doing some due diligence on Celsius last night. The growth is phenomenal. I mean, it's just phenomenal. My biggest issue with Celsius is like, is there a real brand associated with the energy drink? Because with Red Bull, I understand the brand kind of like, go for it, do crazy stuff. Monster, I understand the brand. Celsius, I don't really know what the brand is, but apparently the brand is gym and fitness. That's what they're going after. So that's kind of my only bear case about Celsius is like, what exactly is do they have a moat in regards to that brand that's not replicatable? But in regards to the growth, I mean, the energy drink is everywhere. It's just literally everywhere. And if it's everywhere, as Chris said, it's kind of like a Peter Lynch play, which is like maybe just invest in what you know and just let it keep growing over the long term. SoFi 1019 down 1.24% of the day. PayPal down 62.60. Apple 194, that's green. S&P 500 477. Nvidia 494. AMD 146. Robin at 1319, that's down. CleanSpark now down to 1269. So Bitcoin miners getting sold off just a little bit. Coinbase 180. Truist 3730. Cypher down below $5. 487 right now, down 7.59% of the day. So we're seeing a nice little sell-off right there on Cypher Mining. This is one of those companies Jesse called out the other day, another Bitcoin mining company. And then where is Palantir? Palantir 1759. Okay, so Palantir selling off as well. The entire market selling off just a little bit today as well. The branding is not as good as Red Bull, but the product is way better. Yeah, see, I drank it and I didn't like it. Maybe I've got to try a different flavor, but I think Red Bull is still the GOAT when it comes to energy drinks. Like, it's just, there's the taste of Red Bull. Is like, no one's going to a bar and saying, let me get a Celsius and with my drink, right? Like, everyone drinks Red Bull with their alcoholic drink. So that's another huge market for Red Bull. It's just alcohol. I don't know. Maybe, I don't think Celsius is meant to be drank with a Jaeger or anything like that, but maybe it is. Maybe in the future it could be. Cool. So I think that is it for us guys today. Sorry to end 10 minutes early, but I think this is my final day of recovering, and then I'll be fully good to go tomorrow and starting January. So I want to just recover today and get out of here. Let's do the word of the day, and then we will be done for today's market open. Sid DK says, anyone here genuinely like Celsius as a drink? I'm sure a lot of people like Celsius as a drink. I don't. I tried it and it was just not good, but I'm sure a lot of people do like it. I think I tried the peach flavor. That's the one I did, and I just was not a fan. Homebody, a person who prefers pleasure and activities that center around the home. Okay, honestly, this is me. I hate going out compared to being at home. If you gave me the choice between going out to like a club or being at home, 99.9% of the time I pick being at home. So I am definitely a homebody. I'm sure some of you can relate in the chat. So that's an interesting word of the day, because I've been a homebody for the past 5 days because I haven't been able to leave, but that's me. Yeah, I think a lot of people would be home, but I hate going out, dude. That's just like getting ready, all that shit. I hate all that shit. Homebody's the best option for me. All right, that's it for me, ladies and gentlemen. Thank you all for being here for today. Again, top line news was jobless claims came out. Unemployment still at 3.7%. Cathie Wood selling off a lot of shares to buy 4.3 million shares of Beto, which is a Bitcoin strategy ETF. Tesla potentially expanding to a manufacturing plant in Gujarat. And market being overall green, Microsoft being sued. We talked about that at 36 minutes and the implications of that in regards to AI and what it will mean for training LLMs. And market overall green so far for the day. Bitcoin miners are red right now. All right, that's it for me, guys. Thank you so much. I'll be back and better tomorrow. We got the fever done with now at 97 degrees. I was at 100 degrees a couple of just yesterday. So fever has come down. Now we just got to get this nose fixed up and we'll be good tomorrow. And keep going from there. The other joke I made last night that you guys probably didn't get a chance to see on Finance Junkies because we were up late last night is the problem with Celsius as a brand is that it's just a shittier way to say Fahrenheit. So, that's from... Anyway, that's it. Thank you, everybody. I appreciate it. I'll see you guys tomorrow, 8:45 a.m. Bye, everyone. Have a good day. Good night. Don't hate me, please. Bye.